has alleged that the smuggling took place with the knowledge of the government and the involvement of the nation's central bank. Now, when the US sneezes, the rest of the world catches a cold. An adage the BRICS nations are trying to weaken. Now, the bloc of emerging market nations are mulling a new global currency that will decrease reliance on the US dollar. Andre Cilliers, director and currency strategist at Treasury One, joins us to discuss what the de-dollarisation could mean for the currency market as a whole, and more specifically, as we bring it home to our Africa segment, what the implications could be for South Africa's economy. Andre, good afternoon. Thank you so much for joining us.
Absolute pleasure, and good afternoon to everybody.
All right, Andre, so let's talk about, maybe we can have a quick lesson, Andre, on why the dollar is so dominant. You know, why does the world always lean towards this currency to denominate many things, even things that aren't necessarily even in the United States?
Good, so this goes back to 1944 with the Bretton Woods Accord that was struck by countries, some 45 countries in those days, that agreed that the dollar will be the reserve currency and the currency in which payments will be made, and basically all countries will do their invoicing in US dollars, and that will be the currency of payment. So that's how far back it goes. Now, we must remember that's when we also stepped off the gold standard and all these things. So there's a long history behind it.
Now, Andre, I must ask you, before we get into this, the possibility of a new currency, there seems to be a bit of a geopolitical shift here, and I think that's what's probably informing this conversation, even the issue of de-dollarization. Let's talk about the BRICS nations and them even speaking about a prospective new currency, you know, to counter the dollar. Is this possible?
Yes, indeed, it is possible. Now, we must take into account that, and I'm going to just use oil as an example. You know, oil is priced in US dollars. So all countries, and we know how sensitive our country is in terms of oil price going up, or let's keep the oil price stable, but a currency weakening against the dollar. And then we have to pay more for a barrel of oil to import it into South Africa. And that's where our fuel price goes up, and that filters through to inflation. Inflation filters through to interest rates, etc. So quite a move. The United States, on the other end, own US dollars. That's their currency. So they just pay the $85 for a barrel of oil. They get the oil, and they have no exchange rate fluctuations and no impact on their economy, whilst the rest of the world actually gets impacted by any change in their exchange rate versus that oil price of the dollar, of oil. So can it be changed? Yes. We must keep in mind that changes has been taking place for a number of years now. When I said about the Bretton Woods system, all foreign exchange reserves of all countries was held in US dollars. Over the last 2 decades, that's already started changing. So there's already been a little bit of a de-dollarization in the sense that not all reserves of countries is held in dollars anymore. At this point in time, it's actually dropped below 50%, and some of the reserves of the countries is held in other currency denominations like the euro, like the one, and even smaller countries. So there's already been a shift. So yes, it is very much indeed possible to come with another currency and price certain commodities and invoicing being done in a different currency.
So, of course, Andre, there are these conversations of a whole new currency. Could a currency like, for instance, the Japanese yuan come through and, you know, become a more dominant player in the currency space? I know, I think in my reading, actually preparing for this interview, I had read about, you know, the Japanese currency and how that could counter the dollar.
Yes, but I think, you know, the Japanese currency stands a little bit on its own, and I think it's far more possible for the BRICS countries to come up with a currency. And why do I say that? I say that because, you know, the number 2 economy in the world in terms of size is China. The number 3 economy in size is India. And it's expected that the Indian economy can actually overtake the Chinese economy as the second biggest economy in the next year or 3. So within the BRICS group of countries, we have a massive size of what happens in the world tied up in those BRICS countries. I have to add there that that's also countries, or at least 2 of them, that's in the eye of America continuously, and we know about the sanctions that was imposed on Russia after their invasion of Ukraine. But we also know that China and the US is continuously, at each other's heads about all sorts of things, and the sanctions that sometimes gets imposed on China and tariff hikings, all sorts of things. And when you speak about dollar pricing, then, that's got a direct impact on their economy. So, and I think that's where the BRICS countries is coming out at this point in time and saying maybe we should look at an alternative from within the BRICS group of countries.
Now, Andre, we don't have much time left, but I'm hoping we can maybe even address how, monetary policy in the United States has become so pervasive throughout the world. The U.S. Federal Reserve, they'll make a decision and we'll feel it throughout the world. If, for instance, there was an alternative currency, would this be able to hedge, even nations like South Africa that are often, on the brunt of whatever could be happening in the United States? Would it be able to hedge us against those kinds of things?
Well, they always say, and the saying is that America sneezes and then we get a cold. Now, if there were to be another currency of payment formed by the BRICS group of countries, it would make us less vulnerable to the sneezing of the Americans and less vulnerable to get a cold. And it also would expose the Americans a little bit more to getting a cold when somebody else sneezes.
Yes.
So it would level playgrounds a little bit, and it would make us less dependent and the world less dependent on dollars because there is an alternative. And it would actually be, at the end of the day, most probably slightly positive for people in the BRICS countries because they would have less dependence on the dollar and there would be most probably a little bit more investor confidence into those areas and less volatility in terms of exchange rate movements.
And before I let you go, Andre, I quickly must ask you, we don't have any time left, is the issue of dollar-denominated debt in Africa, as we're seeing debt distress throughout the continent, and how this would also be able to assist African countries who have lent money overseas in terms of, the reliance on the dollar and just parity with the dollar.
I'm not quite sure. Do you mean parity between the 2 different currencies?
Yes, for instance, in Ghana. Yes, like in Ghana, for instance, the cedi's weak, and there's nothing the cedi can do against the dollar because the dollar is dominant and strong.
Yes, well, unfortunately, if you have dollar debt, you're going to remain with dollar debt, and you're going to remain to repay it in dollars. But new debt that gets taken might be taken in a different currency with a different interest rate. But at this point in time, one must keep in mind that what they're speaking about is to use another currency purely as a payment currency, and not yet as financing, etc. So it wouldn't change immediately on the interest rate side for countries with huge dollar debt.
Well, thank you so much, Andre, for your insights and also clarifying that for us. That was Andre Cilliers, Director and Currency Strategist at Treasury.